Hello everyone. Craig, do you want to say something perhaps?
Perhaps. Hey everybody, glad to see you here for our second session. As usual, we have no idea what will happen, but Eusebio will take advantage of whatever the market provides. And just by way of reminder, this is not a trading room. Everything that you see or hear in this presentation is for educational purposes only. So Eusebio, we really appreciate your time today, and it's all yours.
Okay, thanks Craig. So I hope you are all doing fine. So we have a positive news for the US dollar. So let's see if the US dollar will strengthen. This means that we should see the downtrend resuming on the pound US dollar and by correlation on the pound yen too, because the two pairs, and similarly for the pound Kiwi, the pound Aussie, all these pairs are somewhat correlated, and the correlation is often very good. So the pound yen is better moving than the pound US dollar, so we can focus on the pound yen. If we observe what has happened since the London Open on the time pattern, we can see that just before the Frankfurt Open, we have had a nice uptrend starting, and then a nice downtrend. And for me, I interpret this kind of movement, an up movement and then a down movement, as an anticipation by the big boys that the news on the US dollar would have been better than expected. And so this is why we are seeing this down movement in the two pairs, the pound US dollar, the pound yen, and the other pound pair. So let's wait for a short setup, because this is what the context tells us. So the news are good for the US dollar, so we should see the US dollar strengthening. So I will ignore all the long trades on all these pairs, focusing only on the short trades in order to be in agreement with the news release. So we are still expecting, now we are in a good position, so we are expecting an entry setup to the downside, and the setup may appear very shortly. And let's see if this movement, with the movement resuming to the downside, will be enough to reverse the trend. So my aim when I trade that way, when I trade such news, is never to trade every possible movement. It's only to trade the movement which are in agreement with the news. If you want to trade any potential movement, then you will quickly come up to scalp the market, which is not wrong, because scalping the market is a way to trade. It's a trading style, and if you feel comfortable to scalp the market, that's perfect. If it is your signature trade, there is no problem with it. Personally, I don't like to scalp the market. Sometimes I'm forced to scratch a trade rather quickly, because when I see that at some point my trade, you see here the trend is reversing, and let's see here, this is an entry setup bar, it is a BTMO, and the entry can be made around this level. Let me mark the chart where the entry can be made right here, and let me check the stop loss size, 18 pips. It's okay, I sell a little bit too late, but now I'm in agreement with the trade, with the movement. So it is the pound yen, so the results are given in this panel. Let's set the panel here. You can see that the risk is 1%, a little less because the size of the trade has been a little rounded off to the smaller size. So we have a risk of 0 minus 98%, let's say 1%. Okay, and for the moment we begin to be in profit. We have also a setup bar here in the pound Aussie. The stop loss size is okay. I can tighten it a little bit here, and my entry should be, yes, right below the tiger tunnel. You can see that on the time chart we are well below the max price, so we were on the right side of the max price level. Now, once we are in a trade, we will have to adjust our stop loss in order to reduce that risk. Our first priority as a trader will be to reduce that risk as much as possible, possibly until we have a risk-free trade. And for that, I will use the two lines, the magenta line and the red line. And because the magenta line is the outer line, I will use this line for the moment as the movement in value. So we have the breakout of the tiger turn. I can make a sell here. Okay. And now I'm in the two trades, and I will focus only on these two trades. Now, what I do usually when I am in a trade is I widen the chart to see more details of the chart, especially to see when we have the exit setup bar. So I will use the magenta line on the pound yen for the stop loss adjustment for the moment, and the red line on the pound Aussie because it is the outer line. This blue line on the pound yen was an exit setup bar, but the price has not followed through, so no MX. Okay. The price is moving nicely, and you can see that for each new bar, the magenta line is going downward. I can begin to adjust my stop loss because the price has moved also how many pips. If my cursor wants to work correctly. So you see 15 pips approximately, the line is nicely dropping. We have to keep the line, the stop loss above the magenta line for each closed candle. So right here for the moment, and you can see that now we will be almost break even. You see now the risk has been reduced nicely, and we have not taken a profit yet. And for each bar closing, I will consider to adjust my stop loss. Okay. This bar has closed, so I can fine-tune a little bit my stop loss. Now this candle is perhaps, no, it was not an exit setup bar because the stop loss was not above the 20% level, so we can keep the trade, the unit opened, and I can continue to tighten a little bit my stop loss right here. Now I'm break even more than break even. I begin to log some profits on my 2 units. Now I am in a risk-free trade on this trade. Okay. Let's draw a vertical line on this candle to see if it will be a possible exit setup bar. You know that we use a magenta line to illustrate an exit setup bar. In the meantime, the pound Aussie doesn't seem to move a lot. You see, we are not too far away from the break-even. We are around the break-even. And as long as the price does not hit the exit level, no MX. Now, on the pound Aussie, this candle has closed for some times. This one. The next one seems to move nicely. Now I can begin to tighten somewhat my stop loss also, and you will see how the risk on the stop loss here will decrease slightly, you see, with the stop loss adjustment. So no MX here, so no problem. I can move my line on the last closed candle to see where I can fine-tune my stop loss adjustment. And so here I can fine-tune it to this way, looking more and more profit, minimum profit when the stop loss will be taken into account. Is it one to adjust my stop loss? The chart, the price is freezing, so we have to wait for a tick. So here the stop loss has been adjusted. Not yet. We still see this red line. We can see in the terminal the size of the trades here. For the pound yen, with the 1% risk, the size of the trade is a little less than one lot and a little more than half lot for the pound Aussie. Okay, now the two stop loss have been adjusted, so you can see that on the pound yen we are looking more profit. And the global risk for, the risk has been reduced on the pound Aussie, and the global risk for the two pairs is still negative. At worst, should the price hit the two ESL, the two stop loss, the loss would be less than 1/3 of 1%. But we are almost guaranteed here that with the NEMIX, we will be in a profit. So I can tighten a little bit my stop loss. The stop loss size actually is 20 pips approximately, but I can tighten it rather safely, staying a few pips above the outer line, which becomes now the red line. And you can see that I'm looking more profit on this pair. I'm almost guaranteed to make a minimum profit of 1% on the pound yen. And globally, on the two pairs, in the worst case scenario, if the price hits my stop loss, I'm still looking almost a 1/4% of profit for the two trades. Okay, here I'm going to make my XXX on the pound yen, okay, because the price has reached my level. So I will not, due to the time, so we are left with 3/4 of an hour for our session, so I will not consider a second trade on the pound yen, but you understand the mechanism. So we are waiting, we are expecting another entry setup, so to go short with the pound yen. You can observe what the price will do, but let's focus now for the time which remains until we wrap up this session on the pound Aussie and see if we can improve that minimum lot profit. Okay, this red candle has finally closed. I can tighten a little more my stop loss that way, you see. Reducing the risk on this trade, looking more profit on my global position. So, and perhaps we will have an exit at a bar with this candle if it closes as a blue candle. And we have similar days yesterday, which was Tuesday, on the same pairs, because the selection is approximately the same, you see. And on Monday also we have had nice movement. If you observe all the pairs we suggest, day after day, week after week, we'll see that all these pairs gives extremely nice movement in more than 50% of the case. In more than 50% of the case. So you increase that way your probability to catch nice movements. And when you increase the probability to catch nicer movement, consequently, you increase also your profitability. It will be interesting to see here if on the pound yen, if the slow bias will reverse to red. Because we are in an MX situation with the violation of this magenta line, and we are approaching the invalidation of the trade. So let's prepare for the XXX here. See, sometimes the price make a fast spike. I don't have the time to push on the X button, and if the price comes back in my favor, of course, I don't push the X button. But we are approaching. Oh, my trade has been closed, sorry. Yes, indeed, because the price has touched the stop loss. Okay, the price has touched the stop loss by the ask line. In fact, remember the price which is shown on MetaTrader is always the bid price when we are in a short trade and we close a short trade. Closing a short trade is covering the short trade. It's corresponding to a buy. And in such a case, the order is executed on the ask line. So my stop loss has been touched, and so the close has been traded, and you can see the result I have made on this pound Aussie pair. So half a quarter of percent globally with the two trades, just a little less than 2%. And now we can pay attention for a few minutes to how this movement develops, to see in the context of using the scaling process of the max when the XXX should be made, because now the angle becomes a steep angle due to that long bar. No questions? Everything has been clear? And as you can see, I have never tried to make a prediction, simply defining what the context was in terms of the news release and waiting for an entry setup bar in agreement with that global context. So the short side for the pound yen, for the pound US dollar, for the pound pair, so in fact, and then applying our exit technique setups to close the trade progressively and to tighten the stop loss following our rules. Okay? Yes, indeed. Why, Brad? We could have traded, of course, the pound US dollar, because the pound US dollar makes similar movement. You see, the news was here, and after a first pullback, we had here this nice down movement. But we can see that the pound US dollar very often, first of all, is less volatile than the pound yen, but they are closely correlated. And so when you have to go in one direction with the pound US dollar, short in this case, because the US dollar was strengthening and the pound was more or less neutral, okay? This means that by correlation, you could have considered the pound yen short too, or the pound Kiwi, or the pound Aussie short, okay? And I have illustrated that with the two pairs, the pound Aussie and the pound yen. The pound Aussie has given a trade with a small profit, okay? The pound yen has given a nicer profit. This is the first point. And the second point, those pairs are typically correlated. Yes, indeed, in general, not always, okay? Not always. So have a great rest of the week, a great weekend, and so trade smart, trades in a smarter way, pick well your trades, and so be patient, and so trade well. In the meantime, take care. Bye everyone.